La Bolsa de Nueva York anticipa un repunte de las salidas a bolsa en este 2026. Desde el Foro Económico Mundial en Davos, Suiza, pude conversar con Chris Taylor, el jefe de Listados globales y director de Desarrollo. Dice que, cruzando los dedos, ve al menos 5 ofertas públicas iniciales en las próximas 2 semanas, y una de esas apunta a ser una empresa de América Latina, la fintech Agibank de Brasil. Su perspectiva es que, al menos de un grupo de empresas próximas a listarse, 1 o 2 puedan provenir de la región. Brasil no sería uno de los países de donde más provengan compañías que buscan al mercado estadounidense. También de México, aunque sin ofrecer más detalles por tratarse de prospectos cocinándose. Pero hay más empresas interesadas, lo que confirma la tendencia que hemos visto en los últimos años de apostar por listados duales en el mercado bursátil mexicano. La liquidez es el nombre del juego y a ella quieren acceder. De ahí que Brasil cobre relevancia por el debilitamiento de esta en el mercado local. Si uno mira los históricos, no es el mejor ritmo que la Bolsa de Nueva York ve en cuanto a número de ofertas públicas iniciales, pero Chris Taylor considera un buen inicio contra lo que se vio a partir de 2021 con la escasez que hubo, y más reciente menciona el cierre de gobierno que hizo que la Comisión de Bolsa y Valores, la SEC, se atrasara en dar luz verde a un par de estas. De Latinoamérica, Taylor tiene mucha expectativa con las empresas que acudan al mercado estadounidense, pero en la región tiene dudas de que la integración bursátil, como la que ocurre entre las bolsas de Colombia, Chile o Perú, sea la solución a la baja liquidez. También hablamos del anuncio que hicieron el pasado 19 de enero sobre una nueva plataforma basada en blockchain para operar activos las 24 horas del día, incluidos ETF y acciones tokenizadas. A lo que me responde que no es en respuesta a la competencia, sino a lo que los inversionistas demandan. Imposible no hablar también sobre el mercado de las predicciones y su reciente apuesta en Polymarket, de la cual me explica, es una movida inteligente para saber hacia dónde se mueve este mercado y cómo pueden entrar al juego. Chris Taylor, Chief Development Officer and Head of Global Listings from the New York Stock Exchange. Welcome.
Thank you, Jimena. Buenas tardes to all of your listeners and bom tarde to your listeners in Portuguese as well.
Oh, great. Buenas tardes, desde Davos, from Davos. So, Chris, let me start with some big news you announced today. The New York Stock Exchange is creating a platform that uses blockchain technology to enable 24/7 trading of tokenized stocks and exchange-traded funds. Can you tell me more about this?
Yeah, it's an exciting press release this morning. And, when you think about the New York Stock Exchange, we've been around for 234 years. It's an amazing history. Grew up right alongside the United States and its political beginnings. Mm-hmm. The only way you could stay around for a couple centuries plus is to continue to stay ahead of the market and to innovate. Mm-hmm. And that is part of our effort as it relates to tokenization. The other part, too, is at the New York Stock Exchange, we want to make sure that we're operating within market infrastructure. Mm-hmm. And so the way we have structured our tokenization effort is to really work with market participants to make sure this gets done the right way. Mm-hmm. So we're just at kind of, as we, a baseball analogy, we're very, very early innings, but we've got the technology to do this. We've got the partners to do this, and we're very excited about what comes next.
Who are the partners?
Part of the partners are Citibank and BNY, who are going to help us with some of the settlement and so forth. Mm-hmm. And then our own technology. Our Pillar technology is our matching engine that we utilize on the stock market every single day. We're going to be able to use our Pillar technology in this tokenization effort as well.
Now, tell me something. Does this new announcement aims to expand market access, or is it a response to competitive pressure from crypto assets and digital platforms that already operate around the clock?
It's more of a response from market participants and the early stages of moving to tokenization. Mm-hmm. There have been some other efforts by other participants around the world around tokenized assets. We want to make sure that a token that comes from the New York Stock Exchange has the same equity ownership, the same rights as a share of stock. And that really is important to market integrity, to market infrastructure. So everything in the world is competitive, but this is really more of our response to market demands for what they want from tokenized securities as well.
I see. Now, let's take a look into the 2026 panoramics. How does the listing pipeline looks for this year? What are you expecting? More domestic in the U.S. or more international, maybe?
Well, fingers crossed, it's a good year for the IPO market. Last year was okay. It was better than the year prior, but a couple things stood in the way. We had, Liberation Day earlier in the year, and then the U.S. government shutdown later in the year. And that U.S. government shutdown really delayed several IPOs that were right on the doorstep of coming to the public markets. And then the next phase of when the government reopens is the backlog at all the agencies. And the SEC had a backlog of things to get through. So that slowed down the process. So we're hopeful for a really good 2026. Valuations are at good levels. I think investor interest in new issuance is really high. We need more public companies. I think investors realize that too. And we have 5 companies coming public or scheduled to come public on the NYSE in the next 2 weeks. So that's a good start to the year. Happening a little later than we want, but it's a good start to the year. So we're really, really hopeful. And the NYSE, when you look at our listed companies, they really are the lifeblood of the exchange. It's over 2,000 companies. 20% of those companies come from outside the U.S. And so when you look at IPOs, they should kind of resemble our current percentage of companies. So maybe 1 in 5 IPOs will be from outside the U.S., maybe a little bit more. There's an IPO scheduled to come from Brazil in early February, Agibank, a fintech company. Hopefully, fingers crossed, it works, but they're ready to go. So that's a great start for the region. We're really, really excited.
1 in 5 from that's great.
Yeah, I mean, if the proportion stays true to kind of our listed company community, if it's more, great. If it's less, great as well. It's Latin America is really important to us. We have close to 100 companies from the region listed on the exchange. It's a great community of company. A lot of, companies that have been with us for a long time, the likes of American Mobile, Petrobras, Vale, but a lot of newer companies as well. Nubank, Vtex, Globant, really leaders in new technology companies, and that holds true for Agibank too, which is scheduled to conduct its IPO. So a lot of excitement from companies that have been with the exchange for a long time, and a lot of new blood, new energy coming to the exchange as well from the region.
So those 5 companies you mentioned are about to list. Is the regular number that you can get by the start of a year, by the start of a month, a week? How can we measure the pace?
Yeah, it's a great question. And there's a lot of historical data that you could look at to look at the pace. It's probably off to a slower start than maybe we had wanted and the market had wanted for a variety of reasons, particularly the government shutdown. But you never know what to expect in the IPO market. Prognostication, like prognostication in sports or whatever, is a really, really difficult business. And when you look at, if you just go back 5 years and you go to March 2020 and the onset of the global pandemic, would any of us sitting truthfully around a table in March 2020 predicted that 2020 and 2021 were going to be these amazing years for new issuances around the world, IPOs, SPACs, business combinations? Probably not. So it's tough to really forecast IPOs. Currently though, right now, markets are healthy. There's ample demand, and companies are ready. So we're really, really positive about the near-term outlook.
I believe it's the time that the companies were waiting for, because as you already said, we came from 5 years prior that there was no activity at all.
After 21, right.
After 21, a lot of volatility.
Yes.
So that's good.
Yeah.
And going back to Latin America, you mentioned this Brazilian fintech. Which other industries are interested in listing in the U.S. With the New York Stock Exchange coming from the region?
Yeah, there really isn't a limitation on industry. If you look last year, JBS, the big Brazilian company, a global company from a very different industry, had a direct listing on the New York Stock Exchange last year. And so I never want to get too industry specific. Clearly, industries that tend to be in favor with the market are more technology oriented. And so you do expect from the region more technology companies, newer companies to come to the U.S. to access, really the bountiful capital awaiting for them in the United States.
Now, this can be a question that can bring more light to our Latin American CEOs. For a Latin American company, what is the strongest argument today for listing in New York, and what is the most common mistake you see in those who try to do so?
So the most compelling argument is always capital and liquidity. You're not going to find it in a better place. Brazil's a really interesting case study. A lot of respect for the B3. They have a great exchange. Most of our companies from Brazil are listed on the B3 and on the New York Stock Exchange. But the equity markets in Brazil right now are struggling from a liquidity perspective. The trading volume in Brazil has gone significantly down. People are investing in fixed income securities like the juros, and kind of, for the time being, and hopefully it's a short-term thing because we want equities to do well, equities aren't quite in favor. But if you look at some of our most actively traded securities, it's those Brazilian ADRs that trade on the New York Stock Exchange as well on the B3 that have a lot of liquidity. So the interest in equities in the U.S., from investors in the U.S. and outside the U.S., but trading in the U.S., remains very high. And it's a very significant part of our market, not just retail, but institutional as well. And so that really is the key part of listing in the U.S., getting that capital, trying to make an effort to get the valuations that you see in some of the U.S. industries and have comparable valuations for a company that's based outside the U.S. I think that's probably the most compelling reason to come to the U.S. is the valuations in the U.S. tend to be higher than other markets outside of the U.S. as well.
That's the thing, because I believe the region continues to have small and fragmented capital markets relative to its economic size, of course, also. So based on your experience with global issuers, what do you think is the main structural flaw limiting the development of Latin American stock exchanges? For example, Mexico.
Yeah, it's an interesting question. It's one where my expertise may be not as high as the U.S. market. The fragmentation problem that you bring up is pretty interesting because I think Europe is also struggling with that, and they're talking about bringing exchanges together to kind of create one liquidity pool.
Yes, for example, like Colombia, Peru, and Chile.
Yeah, so in Latin America, talk about that. I'm not sure that necessarily is going to work. It really comes fundamentally down to global investors being comfortable in participating in certain markets from an efficiency of trading, how liquid the market is, how efficient that trading is, the spreads of the bid and offers, and really the risk of being able to get out of a position. That really is one of the key things that institutional investors look at. It's one thing to get in. You have to get in efficiently and not move the price. But when you need to get out of a position, you need to be able to move pretty quickly and not have any liquidity concerns. And having a very liquid market in the U.S. allows institutional investors to de-risk their portfolio. So, whether a confederated market in Latin America or Europe is going to successfully bring that liquidity, I don't know. I'm a bit skeptical that it will, though.
That's very interesting to know, because that is a big experiment happening right now in the region. So going back to volatility, do you see these environments delaying listing decisions, or are companies already maybe discounting it? Because I believe 2026, yes, can be a good year, but also we have ahead many things that brings a lot of the uncertainty in many aspects. We have the trade war, the geopolitical issues that maybe can get companies to take a step back again and not coming forward to list the companies?
So it's a fair question. I think when you look at volatility that investment bankers and companies look at relative to IPO, we have a volatility index in the U.S. called VIX, VIX. It's at really low levels right now. And if you think about all the things that have happened in 2025 and in the first few weeks of 2026, while they may seem volatile, the reaction from the markets have been pretty muted. There really hasn't been a lot of volatility introduced, whether it's the jawboning over Greenland, Venezuela, even some of the economic policies.
Maybe the Federal Reserve?
The Federal Reserve, limits on credit card caps, things like that. There really hasn't been associated volatility in the markets that would reflect those policies, which is really interesting. What is the market telling you? Do they not think these things are going to happen? Do they think the markets can digest them? Is AI so powerful that it's going to overcome all this volatility? It's hard to say, but when you look at the measures of volatility, they really haven't moved much, and they're at pretty low levels, which is a good thing for the IPO market.
And what about regulation? Do you see any regulatory changes under discussion in the U.S. that could significantly alter the appetite for going public in the next 12 months, for example? Maybe positive or negative, of course.
Yes, and all positive. So the new SEC is really focused on the public markets and bringing back public markets in the U.S. And if you really look back, for our business, it's horrible. Like, the number of publicly traded companies in the United States has declined significantly over the last 30 years, about 45% decline. That's enormous. There are 40% fewer companies in the U.S. than there were 25, 30 years ago. A lot of reasons for that. One of the reasons could be regulatory. And so the SEC is really looking at some regulations. There's a regulation in the U.S. called SK. It really governs the qualitative narrative around many disclosures, financial and other disclosures. The SEC thinks there's a lot of redundancy. There's a lot of immateriality in those announcements. And our companies have told us that they take a lot of their time, a lot of their resources, and a lot of their money to comply with that. Now, if you think about it, if you're a big company in the U.S., you're in the S&P 500, you're a large cap, you're a mega cap, you have the scale, you have the resources to comply. You may not like everything, but you have the resources. But if you're a smaller company, a mid-cap company, a small-cap company, it's a lot harder. And if you're a private company on the sidelines thinking about coming public, and you look at the regulation that you're going to have to comply with, you may think twice to go public before you're a certain size. And so companies 25 years ago used to come public much earlier in their life cycle than they do now. So some of the regulatory changes, I think, will not only help companies currently in the market, but will make it more attractive to come to the market as well. And then the big one, and there hasn't been a rule proposal yet, so don't want to comment too extensively on it, but it's been public by both the president and the chair of the SEC, Chair Atkins, is there will be a proposal to move from mandatory quarterly reporting to mandatory semi-annual reporting in the U.S. A rule process is going to take time. There's going to get comments on the rule. There's going to be iterations of the rule. But that will be very interesting to see how that changes the appetite for younger companies to come to the markets, to the public markets sooner. So a lot of exciting things as it relates to a lighter regulatory touch in the U.S. focused on financial materiality. And that's what investors want. Okay. And that's what companies want as well.
It would be interesting to watch. Now, let's talk about prediction markets, Chris. They are gaining a lot of visibility on Wall Street. Why betting on this, especially you, the New York Stock Exchange?
Well, it's prediction markets. It's not betting, first of all. So it's interesting.
But you are betting on...
Well, you know, the...
companies like Polymarket.
Like Polymarket. So the chair of Intercontinental Exchange, Jeff Sprecher, is always thinking ahead. And I think that's really important, again, for an institution that has been around a lot longer than most other institutions, particularly in the U.S. It's very important to think about what could come next. And I think he's been very intrigued, and we've been very intrigued by not only the pace of growth of the prediction markets, the way it's been adopted in society, both kind of at the retail level, if you will, by the media, at the institutional level, that it's very intriguing. Jeff was very impressed by Shane, the CEO and founder of Polymarket. And similar to what Intercontinental Exchange did with Coinbase several years ago, made an investment to observe what comes next in digital assets. This investment allows us to get a front row seat and participate in what comes next in the prediction markets. We also believe that there is a market for the data that gets created through these prediction markets. And a big part of Intercontinental Exchange and the NYSE is data that we package and resell to institutions and other participants in the market. So we're going to find out how institutions want to consume that data and be there to answer that demand. So it's a very much a long-term play. There's so much speed, so much momentum in the prediction markets that I don't know if anybody can predict what comes next, but it's nice to be that we're a part of it, that we not only have a front row seat, but we're really a significant participant in it now as well.
So it is really a strategy at the end of the day. You're going to see, as you said, you're going to watch in the front row seat.
Yeah. Well, think about it. Prediction market. I mean, ultimately, we're a market. We're a market for stocks. We make markets in options. We make market in energy contracts. We are always interested when there is a market convening, and this is a new market, and this allows us to be a participant in it.
But what can maybe stop you for going further once you already know precisely what is going on around the prediction markets? For example, from your perspective, what is the main regulatory red line that has yet to be resolved on platforms such as Polymarket, for example?
Well, I think it's so new that the regulatory framework is a work in progress. And by working with Polymarket, having the resources of the regulatory expertise that Intercontinental Exchange and New York Stock Exchange, this may allow us to play a role in how regulators think about prediction markets going forward. Time will tell. Polymarket currently operates outside the U.S. As the regulatory framework comes together, I'm sure there's an opportunity for them to operate within the U.S. as well.
Okay. And now, Chris, last but not least, in a few words, how can we describe 2026?
2026
for the stock market.
is, well, okay, for the stock market, right, all right. So we never predict where the stock market's going to go. We've seen all market cycles in 234 years. We've seen booms, we've seen busts, we've seen crashes, we've seen pullbacks. I'm not predicting where the market's going to go. But I will say the optimism in the market, which could be a good or a bad thing, the optimism is very high right now. I think as it relates to artificial intelligence, technology, 2026 could be the year where the winners separate from, I don't want to call them losers, because that's an unfair tag, separate from the folks that aren't accomplishing what they're accomplishing. So you're going to see some divergence, I think, in the AI bet, if you will, and who knows how it turns out. I hope, though, my hope is that it's one of the biggest years of IPOs in the last quarter century. That is my hope. I think the public markets are so important to the U.S. economy, to the global economy. They're the fairest markets in the world. It's where price discovery happens. It's where investors can get access to the greatest companies of the world. And so I hope some of these private companies that are so big now come to the public markets. That's my hope.
Great. Thank you very much, Chris,
my
for
pleasure.
This conversation
Absolutely.
from Davos.
Thank you as well.
Hasta luego.
Hasta luego.